Euro dollar long-term forecast for the week of January 9th, fxempire.com. The euro dollar fell hard for the week as the rout on the euro continues. The debt markets in the region are still distressed, and now that the larger volume of trading has returned from the holidays, the market has continued the downtrend. The euro will continue to be plagued by issues based upon the debt markets in that region, and the fact that the French notes are starting to sell off isn't a good sign going forward. 129 was a level that we've been talking about for a while, and it did give way finally for the week as we managed to close underneath it on the daily. And as such, we think that the pair could go much further to the downside. 126 is another area we're looking at, and that's basically the bottom of the support area here, which we're not quite to, but we do expect to see fairly short order. It is at that point where the euro needs to make a huge decision, whether or not it's going to bounce and save itself or not. We think that that cluster of orders could produce a little bit of a bounce, but those bounces are more than likely going to be opportunities to sell, especially if we can fail or at least stay underneath the 130 level. As long as we are underneath 130, we are net sellers of the euro, not buying. The continued pressure on the euro should be anticipated because the euro is not only selling off against the dollar, it's selling off against other currencies as well. The Australian dollar, for example, is in a virtually unknown territory. It's broken out of a 20-year consolidation pattern in the last couple of days. And the Kiwi is getting into the same situation. The Canadian dollar has been beating the euro severely as well, and there are signs of weakness everywhere, as one of the biggest signs, in fact, is that the euro is now worth less than the yen. You have to keep in mind the yen is denominated in hundreds, so a sub 100 reading is actually below parity. The play going forward is going to be selling rallies at this point. Since we think 126 will produce some type of bounce, we think we'll get this opportunity relatively soon. We think selling off of a bounce from the 126 area somewhere a little bit higher could be a great setup to short all the way down to 119. We would become more interested the closer we get to 129 or 130, but we have to understand that in this type of market we may not get the weekly signal, so some of these signals may actually come off of the day chart. Nonetheless, we would trade with the overall trend and look for the overall big picture, which of course is 126 and then 119.